Hello, and welcome to this week's very special 1-year anniversary episode of the Penny Lane podcast with Verde. This episode is brought to you by Pennies Going in Raw.
The stock market is hotter than ever right now, and traders are taking advantage. But what does that mean for the people who still haven't started trading? The market can be a little intimidating at first, but you don't have to be alone in the learning experience. We at the Pennies Going in Raw podcast are here to help you. I'm Dan, and with my co-host Hugh Henney, we make the stock market a fun but informative experience for our listeners. We offer knowledge for all levels of traders, from beginners to those who do it full time. On PGIR, we discuss up-to-date news about the stock market and interview other traders who all started out just like us and made it big. You'll hear from Hugh and other multi-millionaire traders, founders and CEOs of companies, FinTwit superstars, and even professional athletes. Have you ever thought about investing your hard-earned cash but don't know where to start? Do you have money just sitting in your savings account collecting dust? We were all there once too. Listen to Pennies Going in Raw on the iHeartRadio app, on Apple Podcast, or wherever you get your podcasts.
Verde, hi, welcome to the Penny Lane podcast.
Hello. Thanks for having me.
Thank you so much for being here. Ellis, hi, happy birthday.
Oh, thank you. It was a beautiful birthday. I went a little viral, so I was feeling myself.
Oh,
also
yeah.
made some good money.
Yeah.
It's just a great week, man. After the weekend with the boys, I just feel blessed to be in the situation I'm in, and I've never been this motivated in my life, just in personal, career, trading, everything. I just feel very motivated and inspired. So
I love that.
What an
now,
opening.
When you say
hell yeah. Yeah, we're getting a little heavy here, Verde.
Inspired.
when you say weekend with the boys,
Yeah.
what do you mean?
According to bro code, just hung out, drank some 21-year-old beverages with the boys.
Right. Are you going to
couple
tell
of
us who you were hanging out with, or is that a secret?
So I was with Shark Trader, your buddy.
Yeah.
Dr. Bull Shark, who was literally we text and he told me he loved me, and I told him I loved him too. So it's getting kind of serious.
When Dr. B says he loves you, it's like a different kind of feeling.
He's crazy. He's a crazy consistent trader, and he generally wants everyone to succeed. And you can tell that if you ever meet him in person, you can just sense it on him.
So
Who else was I
nice.
with? Oh, it was with Flavio.
Yeah.
I don't know if you guys stocks with Flav. Yeah, he's the boy. And then Mitch Picks. So 3 years of knowing him, I finally met him in person, and he is a legend. That's all I got to say.
Was it kind of, I just went to New York and met up with all our friends, and I was very concerned about it, except I was very concerned until my flight got delayed for 7 hours, and Real Simple Ariel and I were headed to the same airport, and we were texting, and we're like, well, let's just rent a car together and drive from Pennsylvania to New York. And immediately I was no longer nervous. I was like, yeah, of course I'll of course I'll get in this car with Ariel and do this. And then showed up to the dinner. I was like, I feel like I've known these people my whole life. Anyway, that's my way of asking. Did you find it awkward, or was it just no big?
Yes, because people don't know what I look like or how I am in person. But yeah, once we all started hanging out, I felt like I've known everyone for ever. It was funny. We actually didn't talk about stocks at all until Sunday at 9:00. But it was a great experience. There's a quote that stuck with me that Mitch kept repeating. He's like, how many people died in their lives worrying about what's going to happen next? Every time I ask him a question, that's how he respond to me. So we're like, okay, yeah, I'm down. Let's just go hop in some limo and go to a penthouse. It was crazy.
That's exciting.
Story for another time. But yeah, no, it was amazing, and definitely motivated. It was a really good experience. Had no serotonin left. Still recovering. But yeah, enough about me. It's all about Verde now.
Yep. All right. Well, welcome, Verde. Sorry, we're gonna have to cut this out. Hold on one second. They're in the refrigerator, maybe in the drawer. Okay. Thank you. Sorry, Quinn needs cheese sticks. Emergency.
It's okay.
All right, Verde. So we were just talking with Ellis about meeting other traders in real life. Have you met other traders in real life?
Yeah, you make us sound like some mystical creatures. Um, yes, I have met several um, in real life, or I think Twitter likes to use IRL. Um,
Yeah, sure. IRL.
yeah, so actually, probably the biggest, not probably the biggest, I guess overwhelming gathering of them was last Labor Day weekend, where where um, Penny's Going and Raw put on a sort of FinTwit conference in Reno, and hundreds of people showed out for that, and I met face to face a lot of people that I've actually known for um, admittedly 2-3 years that I had never actually met in person.
And was it just simple, easy, like no big deal to transition from online to in person?
Yeah, because I mean, to be fair, some of these people I'll I have traded like on voice with them, so you know, I understand. We have like a already kind of like a rapport. Um, you know, anyone who knows Dan, knows as soon as you talk to him, you know all you need to know. His, you,
Is he
you,
as lovable in
oh yeah,
person?
no, you can feel, hear, sense his personality from a mile away. It's great.
I just met Dan last week.
Oh, you went to Houston?
Went went to Houston. We had dinner. We hit up his famous bar. We He showed me around his building. It was surreal and amazing.
Nice. Did you have a similar
Yeah,
similar experience to what I was describing?
love
Yeah,
Dan. Yeah, he just is who he is.
unapologetically.
Totally. All right. Well, Verde, today is the podcast. I said birthday, but maybe that only applies to people because I think it might be the anniversary, but birthday seems slightly more festive. Anyway, 1 year ago today, we released our first episode, and it's wild 1 year later to be talking with you when 1 year ago today, I mean, you're really like a legend in my eyes.
Oh, thank you.
Like, here I am just like, oh, I think I'm just going to start trading and start this podcast, and would just watch the Atlas floor all day. And I just have always been such a big fan of yours in the way you conduct yourself and the way you trade, and just big fan. So I'm so glad you're here.
Thank you. I like super appreciate that. You can't see me, but
Yeah.
blushing just a little bit.
Well, can you walk us through sort of how you got into trading and then how you got into FinTwit?
Yeah. So, as everyone for the most part's aware, thanks to my profile picture, I went to Florida State University, and that's both for undergrad and for law school. And when I graduated undergrad, um, as well as most of my friends around the same time, they all had left, and I stuck around for an extra 3 years for law school. And then, here and there, they all had jobs, disposable incomes, and they, hey, let's go on a ski trip here, or, go to the Keys here, or a boat trip over there, or whatever it is. And here I am in law school, with no money and focusing on school, and I hate like having to say no to things like that. So that was kind of a bit of the like outward motivation, and for anyone who isn't familiar, it's a bit hard to hold down a meaningful like full-time, even like a part-time job during the earlier years of law school. So
Totally.
that was kind of the outward motivation to, if I can't turn time into money, let's try to learn a craft to turn money into more money. And I literally, 2014, got a brokerage account and threw a few bucks in it and started kind of, just jumped in the pool. I wasn't even aware, I don't think, that like paper trading was a thing. So I just learned from, with the real stuff. And then at that time, FinTwit wasn't really much of a thing. I think everyone gravitated for the most part toward StockTwits. I'm actually not 100% sure when StockTwits started, but in the 2014, 2015, 2016 time, yeah, I think most of the people or personalities or new followings of any stock that I liked, it was for the most part it was StockTwits. Um,
Yeah.
and then slowly kind of evolved into taking over a pretty large part of the Twitter sphere, and here we are today with FinTwit.
And then, so what was your first foray into Discord?
Um, that was so a friend that I had met on StockTwits. Um, he started a room, and this isn't Atlas. This is, a this is a room that went under several years ago. Um,
Sure.
so it was just a pretty small community, a few dozen people. We all just it was Slack, actually. It was not Discord. And, it was just having a bunch of eyes on the market. It was less, alert based, I'm long this, follow me, kind of thing. And it was more just a lot of
Yeah.
eyes on the market rather than, in an effort to kind of minimize some of the noise, a lot of the noise that you get, just through like FinTwit as a whole. Um, and then that kind of slowly developed into, the better traders from that group kind of branched off and did something else and reached and grabbed some other people and whatever, and then things just kind of evolved slowly but surely. And so I've been part of a much smaller um, Discord since with people that I've been trading with, honestly, since I think like 2018. So like 4 years now. And then um, through, I think around that time as well, 2017, 2018, 2019, a lot of like larger chat rooms were, kind of born from there. And that's where, I met Zach Morris, and with him, PJ and the others. And, a lot of the traders in there were very momentum based traders. And so, um, I just kind of started poking my head in there and seeing what kind of helpful information that I could possibly share.
Fascinating. I've heard versions of that story before, and I always say that it feels like one day there's going to be like a documentary or something made about how this all sort of happened. I truly find it fascinating. Um, but anyway, so you differentiated yourself really by, I think, being able to read filings faster than anyone else in the world.
um, I would say that's partly true.
Okay.
So no, my one of my edges, as a trader, you have to find an edge or a few edges in order to, kind of beat out other people. I'm not talking about beating out funds and algorithms, but beating out just potentially other traders, so you at least have some sort of advantage over them.
Sure.
So one of my edges was or is my speed, and whether that's reacting off of a news headline and knowing what to look for, what's tip more often than not, an instant buy or an instant sell or whatever. And then to your point, the filings. So what what a lot of traders are familiar with is, especially in small and some mid caps, is when earnings come out and it's these mostly garbage companies that might, in that headline of the press release, it might say that their sales were up, 800% or whatever year over year. And they're a small, it doesn't take much to move them. So that headline gets around, and that's where, there's plenty of range there and plenty of money to be made there. Now, sometimes they actually don't formally release that information in a press release, or before the press release, they'll file, the 10Q or the 10K, which is a quarterly or an annual report on the SEC website. And if you have certain programs or like an RSS reader, you can see that info that it was filed. And then, that's where I would say I'm probably a bit faster than a lot of people, is pulling up that info, going to the meaningful part of, the financial statement for the year, and comparing it year over year. Pretty much the three main things, sales or revenue, and then net income or loss, and then earnings per share. And if all three of those things are, for the most part, a big increase from the prior year over year, usually you're going to have a positive reaction in that, that little small cap. And if you can get that info before it's put into a press release that's widely disseminated to the market, that's an edge. You're seeing that in real time as it's filed before it's put in a press release, and when that was a bit more common, I think, a few years ago than it is today, because I remember that frequently would happen, and now it's much less frequent. And anyway, when it would happen, I was able to be first on the tape all the time, and then that info would either pass around, or then, 10 minutes later, 12 minutes later, 40 minutes later, whatever, then they would issue the press release, and it would be that same, bullish information, and then people were starting to buy it up and whatever, except I've already been in it for 20 minutes, and now, I'm sitting there with free shares riding it on the way up. So yeah, I would definitely say that in recent, last couple of years, that edge is getting more and more squeezed, because more and more traders have more and more resources, and other people are finding that information just as fast, if not faster, than me now.
How did you get into, how did you realize that was going to be an edge? Like, what was the moment that struck in your mind that was like, oh, if I can, I set an RSS reader, I get the news faster than everyone. Do you just time, like screen time?
Yeah.
Or did you just set up one day on a whim and go, I think this might work?
No, definitely screen time, because I would be, just sitting there trading or looking at, after hour, a lot of filings come out pre-market or after hours. So I would just be, kind of sitting there watching, and then some random, $2 name all of a sudden starts screaming, 50, 80, 100% after hours. And I look, and there's no news. There's no press, no nothing. But I go to the SEC website, and I see, oh, there's a filing. There's a, not just earnings, but there was, a stake file, a 13G or a 13D, an active or a passive stake. Oh, so-and-so took a 20% stake in the company. Boom, traders react and hit, and start swiping up offers. So once I see that was happening, I, kind of just put two and two together. Okay, if you can get this, it's just an information race. If you can get this information faster, you could be earlier on the tape, and that equals, two plus two equals four. Yeah, that equals more money in your pocket.
Another question for you. Do you think your experience in law school reading all those cases helped you to kind of sift through all the noise of a filing? Like what to look for? Like almost that like analytical, like, I don't know if I want to call it a skill, because I have friends that are, that went to law school, and the way they read stuff is just lightning fast. They know what's important and what's not, like instantly.
The analytical side of things definitely helps, because it's not always just I will admittedly say, for earnings reports, it's pretty objective. Like I said, you literally go and look at, for the most part, revenue, net income or loss and earnings per share. And when it comes to, but for the analytical stuff, companies file what's known as an 8K all the time. All an 8K is an unscheduled release of news. That could literally be something as meaningless as our chief marketing officer has chosen to resign, or that could be something as meaningful as we signed a supply agreement with Tesla for lithium. That would obviously, in this market, that would send a stock up, hundreds of percent very fast. So that part, and that happens all the time. So that would that's where that analytical reading, would definitely come in handy, because there, in those types of filings, you definitely have, whether it's a sales agreement for this or a distribution agreement or whatever it is, there's plenty of noise in there. You got to get to the meat and potatoes of it and understand, is this a meaningful headline? And if it's a meaningful headline, why is it meaningful? And then just make your decision, get in, and then, all from there, you can share the information, you can share it first, you can rely on other people to share it, but
Another question for you. I call them OG traders. Like we talked in the pre-show of some old guys we know have been trading for years. How important are filings and warrants and share structure? I feel like when it comes to when people used to remember those massive DD threads you see on Twitter back in 2020 that are kind of pointless? I feel like some of these filings when it comes to share structure are so important. Could you kind of talk to the basics of share structure when it comes to these warrants? They have unexercisable or immediately exercisable. I'm not super sure what the terms are, but could you provide what's an example of a good share structure and what's an example of a bad? Just high level.
So at a high level, we've seen, actually today's a pretty good example of that. We've seen, I'm going to use IPOs as an example.
Okay.
Today, what was it? BWV. So that was an IPO that IPO'd last month that was priced at $9 a share, but because of its share structure, it has no warrants. It's a very small 2.2 million share float. And, this part's speculative, but arguably some games by, certain shady underwriters, whatever. It went up several 100% on day one. And then, wildly enough, it stayed up there. It hung around. Now, we've seen that time and time again. We've seen that before numerous times. We've seen it with, and I'm just going to go with recent names. We've seen it with AERC that was it was IPOing as a penny stock, and yet it opened up, I want to say in the high teens, maybe 20s, and then it screamed its way to 100, and hung up there. It stayed up there. And that's because of its share structure. SOPA was a similar one that IPO'd priced as a penny. The company that is going public didn't necessarily know that this was going to happen or intend for it to happen. It just lines up with the amount of shares they're offering, the amount of money they're raising, the pricing of it all. And then, from there, I guess that now comes the importance of the share structure. If you're IPOing with a bunch of warrants and a dirtier share structure, so to say, that's going to be a lot thicker, and it's going to move. Even if it's a 3, 4, 5 million share IPO, if it has warrants, without getting into the nitty gritty part of it, just imagine that it's practically double the float, because you have. Especially if they're immediately exercisable, all these warrant holders can be selling into every single, move up or down. So they can it's going to stay heavy, right out of the gate. And it's the, those cleaner share structures that are easier to move. And by cleaner, I just, to your point, with warrants, it's the absence of them that allows a stock to move a lot cleaner. as well as, if we're talking not about an IPO, but perhaps there's an outstanding shelf, or an effective shelf. Well, now the company could be diluting. You have, I think,
almost like CYRN, right? When it got really
yeah,
heavy that one day out of
yep,
nowhere, traders were like, "Uh-oh, something's coming," and you can tell. Like I can tell sometimes in the tape, like if an offering's coming, like you just get like a weird. It just
nothing
moves
moves it up.
weird.
All the buying power in the world, like, literally
Yeah,
cannot move it up. Yeah, because in the end of the day, supply can always exceed demand. So supply is going to win. 10 times out of 10 there. If one of these days, I'm not saying it's going to be tomorrow, but Mullen, MULN, they have a
oh,
prospectus
no,
out for like 260 something million shares. The day that goes effective, that's going to be a race to the door to dump those shares out so they could raise the money that they need to raise. I mean,
and then just reverse split and
yeah,
keep going,
yeah,
keep diluting. It's like AEI.
yeah,
AI, DSS. I know it's the same CEO for both companies, but just such shady, it's hard to explain. But it's also, that's what we trade, right?
yeah.
Some people, we talk about falling in love with a stock. We have to realize some of these stocks have, we'll call them games to
Absolutely. And
them.
it's funny because once upon a time, some of these names were actually really good traders. And they were really good trading vehicles. So because I've been doing this for several years, I vividly remember a time, I want to say in 20, maybe 18 or 19, where of all names, TNXP was a low
Oh, God.
float, couple dollar name that if there was news or just, for shits and gigs, it would move, and it would move a lot because it was a small float before they diluted the thing to death. So, you know,
I do have some noob questions for you because I know a lot of people. I've been using the term noob a lot because I've been playing Call of Duty a lot. So for a noobs, like means a newbie. So I'm gonna ask really simple questions like what's a float and what's let's say a warrant, right? Because I feel like people see low float, everyone assumes it's going to the moon, but like what does it actually mean to someone who wants to learn how share structure and all that kind of ties into plays?
sure.
Like, what would you classify a low float? Like under, like I consider it like anything under 5 million. Sometimes 10's pushing it depending on the vehicle.
So a float there's an important difference between a float and the company's outstanding shares. So every company out
Okay.
there has a number of outstanding shares, and what that simply means is the total number of shares issued and outstanding of the company. So that number, let's just use as an example of ABC as being 50 million. There's 50 million shares outstanding. Now, most of the time, the way a lot of these companies work is your insiders, your founders, your CEOs, your vice presidents, your early round investors. Obviously, they're going to have a pretty good bulk of shares, and if it's a decent, attractive company to investors, you'll also have some institutions in there. So a lot of times, if this example of ABC having 50 million shares outstanding, let's pretend that the CEO has, 20 million and the COO has 10 million, and you have a round of, early investors or, whatever or the board of directors, whatever, has another 10 million. Well, if I just said the numbers that I think I said correctly, that's 40 million right there. That's taken.
Yep.
And now you're left,
I have a calculator.
with 10 million. So if that,
Okay.
so comparing outstanding shares to the float, in that example, outstanding shares is 50 million and the float is only 10 million. The float is just the tradable amount of shares on the market, on the secondary market, the shares that we can trade.
Okay. So it's on Webull, Thinkorswim. The ones that we buy are the quote unquote
Yeah,
float,
those are
right?
part of what's known as the tradable float, and that's where you get different varying degrees of volatility in certain stocks because you have $2, you have $2 companies and $200 companies that'll each have 100 million share floats. You also have $2 companies and $200 companies, per share, that have 10 and 20 million share floats, and that affects how they move a lot. I mean, you could there's expensive names out there that have small.
MSTR, it's like 10 mil float, and it's a $600-700 stock. It's a Bitcoin name. That thing moves insane.
That's a good example. I was going to say, I think iRobot, the people who make your Roomba is one as well, unless I'm misremembering. But yeah, and those are now you're dealing with 50-cent or several or whole dollar or several dollar spreads, and that's a consequence of a small float. And if you're talking about a cheaper name, now you're talking about maybe 2, 3, 8, 12, 15-cent spreads. I mean, shit, if this float's small enough and you got, your, ISIG, just, using a recent example of a small float that ran, I'm pretty sure that float is something like $1 million or $1.5 million. That sometimes, sits around with 20, 30-cent spreads. So you have to understand also the risk that you're taking in playing these little floats. If you want to buy that, and you're buying offers on a 20-cent spread, and all of a sudden it doesn't work in your favor, and now some bids have gotten whacked down, you could be 60, 70 cents out of the money in a minute.
Yep. And also on low volume pullbacks too, you can be down $1. And I see a lot of people, they kind of panic when that happens, but you just got, I mean, it's happened to me when I was new. I'd see a low float go and I buy it, and it just, it was like lunchtime and it would dip, and I'm like, why am I down $1 a share right now? Right? And it's just
not a fun feeling.
It's all subjective. Yeah, not a fun, but it's really fun when you're in a low float that has news and it goes like 600%.
Oh, it's amazing.
That's a great feeling.
It's absolutely
amazing. That's when you go get the Lambo tinted and repaint it.
There you go.
But no, I appreciate the basic breakdown, because I see a lot of misconceptions when it comes to it. Just like, what is actually a float? Because I feel like a lot of alerts nowadays, like, it's a low floater going to the moon. I'm like, not really. Like, they have an S3 on file, and they could at any minute could just drop it.
Well, and to be fair, there's certain online sources that people use for float checking that they sometimes don't update them, all the time, and so they don't necessarily keep up to date with the current float. I mean, if we already mentioned Mullen, let's just use that again. FinViz, which is actually a reputable source, has the shares outstanding on that as 17.4 million. That's 10% of what the actual number is, and that's before they sell more shares. So you have these stories that are able to be written and pitched around from chat room to chat room or all throughout FinTwit, because people are, to your point, sharing sometimes inaccurate information, whether it's intentional or whether it's actually just, some ignorance. It is what it is. If it makes the volume and it makes the thing move, you could trade it. You could trade it. You could trade it.
I have seen that though, especially like I've seen you in chat rooms, like, tell people like, hey, like, this is the actual real float. I wonder, I don't know, do you ever get backlash for that? I guess that's a good way of putting it. Like, hey man, like, for example, Mullen's like, oh, it's actually 100+ million float. Like, do people ever give you backlash for it? Or do you just want to make sure, I guess as part of your integrity, right, that people have the proper information to make their own decisions? Is that kind of how you do it?
Yeah, I mean, there's definitely times where people don't like how, blunt I could be, but you know what?
I like it.
Yeah, I mean, and in the end, look, first off, I don't care, because all I'm doing is sharing objective information when I'm doing something like that. I'm not sitting there front-loaded short or whatever, and then giving this, what they like to call it FUD, FUD, and then waiting for the stock to crash for me to cover. Like, I don't have that kind of influence anyway. So all I'm doing is, if that information is preventing or helping save one person from taking what would be a shitty loss, then my job there is done. That's a win in my book. And I think actually a really good example today, pre-market on that, was IMAC.
Oh man, dude. People got Oh, I know what
That
you're saying.
was, and I'm not going to name any names, but that
Yep.
moved on a headline with the word Walmart in it. And okay, that's fine. But that's where it sometimes helps to, okay, this has the name Walmart, but how meaningful is the headline? And all it was, they finished some pilot project with Walmart. Okay, well, was there a prior press release about them beginning a pilot project with Walmart? Because if that's the case, then them finishing it is probably pretty insignificant. And I did a quick search, and yes, that was exactly the case. So when, an online streamer with tens of thousands of people watching him said he went long, and then in seconds, it went from $1 to $3, and then got completely just smacked down, obliterated from there. Okay, now it's starting to settle back into ones, whatever. And people were talking about, in chat rooms, you have, okay, support level here. People now, when they see the range that it just went to, it went from 1 to 3s in
Yep.
seconds. Well, now they want to dip buy back in the ones and hope that it gets back up there. So while that part is going on, and before hopefully people, get hurt from that, that's a good example where I'm sharing, okay, now that the fun part is over, the initial press release, the thing went 200% in a second and crashed back down. Now that part is done, because I'm not going to, try to step in the way of that insane volatility.
Yeah.
So now that part's done, hey, you people that are looking to dip buy this thing, by the way, that news is not so new. And here's why. And that's just me sharing objective information. Now those people could do whatever they want with it. But,
Yeah.
I have been doing this for quite some time, and what happened to that name? It just faded off for the most part all day. So
All day. I saw some people get bodied
yeah,
this
I mean
morning by
it's
it.
it's unfortunate, but it's also just a natural consequence of technology, trading in 2022. It just is what it is. You
Yep.
know,
I appreciate your honesty. I know it was a tough question to ask,
no,
but I figured I always like to hear people's take on why they do certain things. But I respect that.
I
I think
definitely
in Fence
I
would be
don't
honest.
like coaching stocks. If your stock needs coaching behind it, then it might move, but it's not going to move organically. And for
What's coaching? Like, how would you define
like,
coaching?
I mean, I'm call it pumping. I mean, it
Okay, yeah. Call it what it
yeah,
is.
but
It is
like,
what it is,
if you
right?
need to, you know push it through resistance levels or whatever, and help that action take place with whether you're posting here and there. I mean, I'm not saying one thing is good, bad, or better than the other. It's just not my style, and so I'm a bit more blunt. I'm a bit more objective with my information that I share. Like, here's price levels that are key to this thing on the up and on the down. You can take that information and trade based off of it. Here's um, you know this random low float that's moving 100% already. Well, guess what? It's easy to borrow. Easy to borrow means a lot of people can get short in that prematurely and then get bent over, and it can keep going. Like, that's useful information. Um,
Yep.
as it went parabolic, and then came down, it didn't really come down long enough for shorts to, meaningfully get out. Well, if that's the case, it probably continues to go a bit more parabolic. That's information that's, useful to take and form your own trade plan around it. If everyone is taking the same entry and the same exit, quite simply, the trade is not going to work.
Yep.
There's only
Oh, that's
so
good.
many, there's only so many shares. So if everyone is sitting there, taking your exact entry, that just doesn't work.
Only if it was that easy. Imagine we could all get at the same price and stocks went to the moon,
Yeah.
dude.
So obviously it's not working now, but like there was a time I feel like trading low floats was less hard to do.
Oh, I would,
And I was just
I would say it's. I mean, you could look at. Sorry, I didn't mean to cut you off, but SBFM is a pretty good example today of low floats are working fine. It's just once they become their own beasts with their own volume that don't need that, that coaching that I was talking about. SBFM is a
Sure.
very small float, and it just moved from $2 to, I think it hit 12s today in after hours, all in a few day span. And that was, without a lot of, sure, there was a lot of FinTwit activity on it, but there was no
Uh-huh.
single person or group behind it going from there to up, from down there to up there. There was a press release that started it all, and it made a move, from that volume, and then it just, stocks can kind of do one of, I guess, three things. They could be, what I call an all-day fader off of that, pre-market craze or even market hours craze, and then it could just fade it all back down and retrace the move, or they can linger around sideways for a very long time, and then you just kind of forget about it till it falls off radar. Or they could hang around for just another little couple days or two, and then all of a sudden jam on higher. And that's, those are what I would consider an organic move. That wasn't necessarily a pumped or a coached move.
All algo.
Yeah.
And also the cool thing about when you have these high volume, like low floaters too, is there's so many different ways to play it, right? Like shorts get their action, bulls get their action. Like everyone, there's a little bit for everyone, I think. And you could literally just focus on the same name, pull up the 1 minute chart, just chart it out, and just scalp it all day.
Yeah, and because of the amount of natural liquidity in it, volume in it, they're, even though it's technically a low float, they're very, very liquid and easy to get in and out. So
Yep.
if you
tight spreads too, you can market buy too, depending on your account size.
You're not going to get that much slippage. If you like trading for 9-cent scalps, you can do that. If you like trading for 90-cent scalps, you can do that. And in the same name.
I do see. Now, random question about indicators. Do you use any? Are you an indicator guy?
Yes.
Like, how would you define your trading style? Right. We all know that you're the filings legend and the. Yeah, we're just calling you the legend. Honestly.
Well, in this vein, I also want to know if, like, day in, day out, what's your bread and butter?
My bread and butter is just sheer momentum.
Okay.
What I really, really like, and probably what is one of my higher, what definitely is some of my higher win rates is, though, it wasn't SBFM, but to use it as an example, where it goes crazy on day one, and then on day two or day three, it comes in quite a bit and starts round tripping a little bit. Not saying reverse the entire move, but comes back in. If it went from 1 to 3, maybe it comes back to 2.5 or 2 or 1.5, and then when people forget about it and they no longer want it, that's where you see those wonderful setups for those day 3, day 4, where they then get that big extended push, and they typically try to retest that day 1 move, or depending on the volume, they'll blow through that day 1 move and become this, to use the ongoing example, this SBFM. And that was, I don't have a chart in front of me right now, but that was an example of one that, I think it went from 2s to 4s, and then it just kind of hung around for a day or two, and then it kind of ventured to 5s, came back down, and then another day later, boom, and then today, boom. So
I can't believe we brought up day 3 setups. That's the easiest setup to learn.
Those setups are great for my swing trades, for my overnights.
Yep.
For day trades, I tend to do best with some of these low floats that made a big move either pre-market or in recent days, and then you can kind of just see them coiling for that next level move. I think a recent good example was before they kind of diluted it some, was ISPO. So if y'all remember, like 2 months ago, that de-SPAC that went from like 10 to 100s, and it came pretty well back down in just a couple days time, and it was chilling out in the 30s for, a couple days or whatever. And I just, that obviously earned itself a chart spot for, several days, if not a few weeks, even after that move, because I just know from experience, almost always, there's going to be some sort of attempt for it to go back up. And I'm not saying to go back up to 100, but if it went from 10 to 100 and just as quickly back down to 30, then it very easily could go right back to, can get that range back up to 50, back to 60. So I start kind of recognizing some, and I guess actually to answer your other question about indicators, really just volume and key price levels. If, certain key support levels, were tested time and time again and held, I mean, they only get stronger each time that happens, for the most part, and more important. And if that, so just using that as an example, and I remember, right before I left for vacation, it was great because I remember that ISPO was, I think I picked up almost $30 on it. I bought it in the 30s and I sold it in the 60s.
Yeah, I saw that trade when you posted it. I actually I studied it a little bit because I think you posted where you bought and where everything. Pretty sure I have a screenshot in my notes somewhere because that was a beautiful trade.
And I'm really glad to hear you say that because that was part of the motivation for my doing that is like, sure, who doesn't like taking a victory lap on a really, on a home run trade, but other successful traders that I follow, look, in the end of the day, I don't know everything. I only know, a fraction of everything. So, and a small fraction of that. So the other successful traders that I follow and that I look up to, when they share, chart setups of their trades that they took, I do the same thing. I look at their entry and their exit and I try to see what they saw. And that helps.
Absolutely. So, yeah, that helped me. I remember looking at it because you posted you positioned everything. And I was like, I took a screenshot of it in my notes and just reviewed it just to see what you see. That's how I learned.
And to be fair, and this is one of the reasons that, sometimes I have to be a little more high level, of an idea person where, I don't necessarily just say, long XYZ, but, here's key level this, here's, there's high relative volume coming in. There's, just pointing it out because I remember that ISPO trade, going long and it moving a bit, coming back down. And then it tried to move again and it came back down. But as it, kept retesting and then it confirmed, I was able to add in and, that worked for me. That doesn't always work for other people. So if you're one of those people that has to, alert, and then you got 100 people who followed the call, but all of a sudden it dipped 12 cents and then half those people wind up selling it, it ruins the play. So that's why I like those, those more kind of natural and organic plays because they actually move, for real. And a good example today of that is SST.
I nailed that trade today, Verde.
It tested, support, like I think I counted 6 times at 2460s to 2470s, and it bounced off every single time. So after, when it looks ready for that good volume kind of breaking out for that last time, that's, yes, it's an expensive, volatile name, but that's a good risk reward, chaseable breakout. And I know a lot of people hate chasing, which is why everybody is so fast to start naming, 18 sympathies as soon as one stock goes 12%. But just sometimes, you're in a better position to just chase the thing that you're afraid to chase. And that's something that I've worked on over, the last probably 1.5 to 2 years of my trading. And I've gotten a lot better at it. And I'll tell you what, it's saved me God knows how many or more than tens of thousands by not immediately going to be first on tape on a sympathy. The thing.
Yeah. Because sometimes you get bagged too. Because what if the runner doesn't go? Like, what if the runner goes like 10%? Like, you're gonna get absolutely bagged. Everyone in Robinhood's gonna market dump on you. You're cool with Trogdor, right? Yeah, Trout, he drilled in my head this year, like, dude, just play the
Yep.
main runner. Like, you know what you're doing, just play the main runner. And like he would, like, I would talk to him all the time, like, dude, just play the main runner. And it saved me so much money because it is a sympathy market, but at the same time, like, it's not chasing per se on like I would say like a micro time frame, right? Maybe on the daily, but if you can point out key levels and you know where to scale, where the supports are, when you see those long wicks come off the bottom of a key support and you see big buyers just smacking it, you're like, oh, it's party time.
Yeah.
SST though, I overnighted like just a few handfuls of calls yesterday because I saw kind of like cup and handle forming for the day two, about to turn green. I was like, they're gonna run this thing tomorrow. Wake up, it's up 20% pre-market. I'm like giddy in my bed, like, and yeah, it was, and then a knife down off open because everyone that bought options the day before is gonna sell them on the pop in the morning, and it slowly curls back, and you can hit it again.
Yeah.
I think we need us as FinTwit small cap guys need to kind of change what it means to be chasing, right? Now, if you see 4 giant, we call them green goblin boner candles, right? Wherever they call it. That's what when I first started trading with Tesla, they used to call them green goblin candles. Like the big, like 10% move, like low float candle in Tesla. Like,
Oh
what
yeah.
the hell?
When Tesla moves like $10
Yeah.
in one stick. Yeah.
Yeah, and like once 1 minute stick, you're like, what the hell is going on here? You just got to be. I like the mid candle strategy too that the Momo guys treat, right? Where you buy like the mid candle, I think it's like on an hourly time frame, right? It's almost like a Fibonacci retracement. That's a good zone too because it's always going to dip, right?
Yeah. And that's where right. So if you're the type that's afraid to chase, then yeah, exactly. You don't have to, but if you're just a bit, look, rarely do these things move in a straight line up, Like, so what if the thing halted up? Even if it halted up, it's probably going to give you another entry on the way down if it still has the volume and momentum to continue to get a next leg up. So yeah, if there's so many different strategies on, quote unquote buying the dip that ultimately that work though. They work.
Yeah.
And if you end up taking those, like the mid candle or other types of dips, then your risk reward is way better than chasing that, huge green, what a goblin boner candle up.
I love that term. I don't know why. That's like one of the first terms I learned. Now, if you had an advice I got a message today from someone that they just started trading, right? And it's 2022. I would say it's not the ideal time to start trading. If you could go back to your first day you ever opened a broker and you made your first day trade, what would you tell someone?
Oh wow!
Because everyone remembers the first day of trading. I mean, I don't know if I remember my first time I was day trading, but I remember the first time sitting in front of my screens, like, all right, we're gonna do this. What advice would you give to someone? Like simple.
No,
it doesn't have to be anything crazy.
I think what 2021 spoiled a lot of people with was that you could be successful at this and get rich with this overnight, and for a ton of people that was a reality, and they have 8 days to unfortunately or for whatever to pay our wonderful government as a consequence of that reality.
Yeah.
So anyway, as much as that was a black swan event, people need to truly understand that was a black swan event. There are not extended periods of time where 90% of traders win, because this is an industry where 90% lose. And if you want to separate yourself from the pack, it is straight up, it is screen time. It is such a boring answer to give people because they don't want to hear, oh, I got to spend hours and hours doing that. Yes, you do. If you want to be an expert at anything, what's the rule of thumb? You got to spend 10,000 hours doing it. It's just a reality. People think that it's just something they can do in their spare time, and you can, but you got to earn your ability to do it in your spare time, if that makes sense. If you're going to do it in your you could hold down a full-time job and still trade. And I, for years, was an example of that. A lot of people I know are examples of that. but you got to, put the overtime in. And I guess if you're to what you're saying, for a very beginner trader, first day, what would you tell them if they saw something go from 2 to 4? What kind of news was it? What kind of volume was it? What kind of float was that? Start taking notes. Start making a log of, okay, XYZ got this kind of press release out or no press release, and it moved and it has an 8 million share float, and it went 100% today on this amount of volume. Okay, well, compare that amount of volume with prior day's volume. What kind of relative, was it high relative volume? Was it, what made it move? I mean, if it goes so much as to you actually recording that screen and watching it and burning that into your brain, guess what? You're gonna burn that setup into your brain. You're gonna recognize it faster than other people next time. And I started off this podcast talking about your edge. Talk about an edge. Recognizing a setup faster than other people, there's your edge.
Hell yeah. Now, you mentioned note taking. Do you still take notes this day? Because I have a watch list. I have notes on Thinkorswim and everything. I track everything just so I know. I can quick flip to a chart. I know what industry, what's a flow, what made it move last time. Do you do that kind of stuff? Or
I
keep a
take
mental
fewer
note?
literal notes than I certainly used to, but I think because, I'm at this now for 8 years,
Yeah, you're an OG, so.
I know these names. I mean, there's not very often a stock that has news or that is just in existence that I haven't traded at one point or another. And I mean, it's almost sick. You could probably name a lot of stocks, and I can give you a decent, probably within 10 to 15%, what price range they're probably trading at, because I don't know. I just stay that familiar with them, so I don't necessarily have to take notes. I guess for me, and I'm not saying that that other people have to do the same thing, but to my first piece of advice, that screen time, I did that. I got all the screen time in the world, so I'm able to recognize certain setups a bit faster perhaps than some other people, and that's one of my edges. I'm able to read a press release, see some key buzzwords that like to get bought up, and I know perhaps faster than, not everyone, definitely not everyone, but perhaps faster than most, that's a buyable headline, and that and then boom, the thing moves 50% pre-market, day done if I wanted to, so when those,
hey, make your money and enjoy your day, right?
it
That's the
really
beauty
is.
of trading.
So when those things happen, if you're a beginner, study what made them happen, study how they happened, and get yourself familiar with it. Not every setup has to be one that already exists. I mean, any setup, what you called a mid candle setup or the Green Goblin boner setup. These, I
You can
think,
use that
I
now.
think very obviously, these are setups that people created from recognizing a pattern. So guess what you can do? You can recognize another pattern, and another setup can form in front of your eyes that now that's your edge.
Yep.
I have
It is screen time.
I have a favorite, very high percentage, with only high volume, high liquidity names, mostly market related names, like a short setup that I love, that works like 4 out of 5, or even sometimes 9 out of 10 times, and I mean, I'll share it in a second, but recognizing
now
no,
I'm
I
interested,
absolutely will. I'm not going to hide
Verde.
about it, because like I said, it's a market related move with high volume, high liquidity. Sharing it doesn't necessarily hurt my edge, but the point being, when you can recognize that sooner, 20 seconds sooner, 2 minutes, 20 minutes sooner, that's the edge, and that's what will make you a successful trader faster, or maybe period. And without it, you might not be a successful trader. You might be a 50-50 trader, and that's 50-50 is not how you're going to really earn a good living, until you break through that barrier. But I guess real quick, since I did mention it, So
we need the details. Spill it. Let's
usually
go.
and this is for short bias setups. If, let's say, for example, the SPY were, some headline came out and your, SPY trading at 450, and all of a sudden here's the important part. It has to be on a high volume selling candle. The SPY just yanks like to, $2 to 448 from 450. Now, if you want to grab puts, you can do that, but because it looks like it might be going lower. But to our point we were talking about earlier, who wants to chase? Because now your risk reward is shit. So one thing that off that setup that I like to see is that high volume sell candle. And in this example, that sell candle moved $2 down from, on SPY from 450 to 448. And then for just a couple minutes, maybe 4 or 5 minutes, it kind of lingers around and likes to retrace about 50% up from that move that it made.
Yep.
And so, and if this is similar to your mid candle setup, let me know. But
yeah, it's very similar. We're 3-bar play too.
So there you go. So I don't actually really have a name for it. I'm sure this isn't a novel thing that I discovered. So I'm not trying to claim credit for it. So yeah. So anyway, it recovers about 50% of that drop. So let's say the high volume drop, like you said, it was $2 from 450 to 448. And now SPY starts coming back to 449, like kind of like floating back up, nothing like high, buying volume right back in a second, but it starts floating back up to 449. That would be 50% of the drop. Now that's where you could start scaling into a short or buying puts or whatever, because now your risk reward is a lot better, because any premium that just went, that got juiced up through the roof on the $2 drop now just settled down. And also now your risk is a lot better, because my risk is where the drop started from. In this case, it's only that dollar. Versus if you were to chase it and now your risk is $2 whole. And then, so for the most part, those setups like to, like I said, like retrace that candle back up about half the way. And then once the selling volume resumes, it'll at least retest that low of that sell candle. And as soon as it breaks down below that sell candle, now you have usually a cascading, waterfall of high volume selling. Yep. And, that's where you start enjoying the profit, because that's the setup.
Yeah, so I call that a 3-bar play. I actually learned it from one of my buddies. But yeah, dude, that setup's amazing, because you get, because the algos come in, they slam it down, then algos short cover, and then you short their short cover, and then you get that waterfall effect. It's beauty. It's similar to the strat, when people talk about the strat all the time. But yeah, 3-bar play on SPY, dude. Oh man. And another thing is, it's if you bought that bottom part of that candle, right? You're trying to short the bottom, right? Remember, you want to short at resistance and buy at support. It's like the rule 1 of trading.
Well, yeah, it just sets you up for better, that's how you get good risk reward setups. That way, if you're wrong, you're cutting it for paper cuts, as opposed to, several point moves.
Yeah. And especially on options, that $2 candle right there is going to be like 50% of your contract is evaporated. You're very technical when you speak about trading. It seems like you're very methodical. You talk about risk reward, like win rate, everything like that. Did you implement that kind of language and process when it comes to a trade in your earlier years, or just things you picked up over time speaking with other traders?
No, it's definitely what I picked up probably over the last I would say 3 to 4 years, when the process that works for me, really started getting more refined and consistent. That's where, I tried to, the way I speak about it, I tried to more so like objectify it, like keep it objective. Trading doesn't, it's not black or white, but it's as much as you can objectify it, you tend to keep emotions a little more out of it. And I don't know about you, I become a very shitty trader when I trade with my emotions. So
I can vouch for that.
As much as I can keep things objective, that's where my performance usually turns out better.
I have a personal question for you. So I had this conversation with my buddy probably like 6 months ago. Are you cool? You know Barn?
Yeah.
Barn Animal? Yeah, so he's like my best internet friend. We're somewhat in love, but like he's married, so we don't want to talk about it. We discussed that feeling of when you officially feel like a trader, right? Because I feel like in this game, a lot of people, especially when you're new and you know, COVID trader, you feel lucky, like you just got lucky. What was the turning point where you're like, I feel like a trader, like I am a trader? Like what kind of clicked in your head, or any actions you took, anything like that? If that makes sense.
The moment I felt it was when my I wouldn't say when my income from it, you know, my returns like equaled my day job, but I would say, you know, I could look back on the last, you know, couple months and go, okay, this is more than just, you know, taking a vacation. This is more than just buying
Yeah.
myself a nice outfit or nice shoes. Now this is meaningful supplementary income. And that's different for everybody. So there's no magic number. You know, that number could be,
Yep.
you know, a few grand extra here and there. That makes a world of difference to some people. That number could be, you know, a lot more. It could be even less. But so for me, it was when I felt that I was making meaningful supplementary income. And then from there, I do remember the time where I matched my, um, I remember when I made my monthly salary in about a month in trading. And that's where I was like, you know, kind of to myself, like, oh shit, like I, you know, let's hope this isn't an anomaly and that I can recreate this performance next month and the month after. But if not, this is a thing. And this is a thing where if my job, my day job starts getting in the way of this, I have to take real, you know, considerations here because we're not just talking about a few extra bucks. Um, and that was where, you know, things started to change and my discipline started to actually increase. My,
Yeah.
you know, I started playing less, you know, fast and loose with these things. You know, just because I had a good day one day, the next day did not mean I had house money to play with. Because now, you know, I was trying to almost practice for, okay, if this is income, you know, if I just earn if I've picked up that $100 bill on the ground that, you know, Jason Spatafor likes to use this example, you know, pick it up and put it in your pocket and keep it. You don't have to go and bet that $100 bill and double down and try to get $200 right away, unless that set, you know, regather yourself. If that setup works, the setup works. But just because you have, you know, that $100 bill you just picked up doesn't mean you're now free to go, you know, throw it around like you're at a strip club.
It's interesting you brought up the discipline point. The reason I brought this up is because I sent out a tweet. I think it was like that was my birthday, right? Where like I really started to like I sat down, you know, on your birthday, you know, you're getting your feels, and I started to realize like this is not just a game anymore. Like I could really, you know, change my life, my family's life, people that I'm friends with. Like I could, like it's there's something here, right? And just sitting back, like I made my first, like my biggest day ever was on my birthday. I just saw like two
That's
plays, right,
awesome.
two trades, and I just remember sitting there going like, you know, this is not a joke anymore. Like this is real, and if I can keep that discipline moving forward, like this could really be something. And you know, I know we talked earlier about meeting all the guys in New York, and I think you know, hearing how they treat the business, it's a job, right? It's a slow grind to get rich scheme. I think someone tweeted that the other day, and I laughed my ass off. And I think when more people take it serious rather than just, you know, following some guy on TikTok who goes, "Oh, I'm gonna full port every play," it becomes different. It's very methodical. It's very sometimes it's lonely, right? When Spy doesn't do anything all day and there's no small cap runner, it's just like, all right, I'm just gonna go play Xbox
Oh
or
yeah,
something.
today was a great example of, you know, I took one trade that worked for me, and then I literally did not take and this is rare for me. I usually take at least, you know, I would say a slow day for me would be 3 or 4 trades. So the fact that I took one and then I didn't trade the rest of the day, yeah, you're preaching the choir here. Luckily, we had the Masters to enjoy, and I was able to kick back and watch that.
I have in my notes, so every day I note like events that are happening, and I had in my notes from last year. Yeah, when the Masters goes on, there's really not much.
That's actually pretty funny today,
because I know a lot of traders who golf.
Today was a pretty low volume day across the board. Market wise, not talking about small caps and stuff, but in the market, it was a low volume day.
Yeah, they're all playing golf, getting drunk with their buddies on Wall Street. Come on.
Guys. I feel like it might be a good time to wrap it up. Also, I'm going to the Masters on Saturday.
Whoa,
let's go. Amazing. That's awesome.
Yeah.
Super jealous.
I'm a big Bubba Watson fan.
Wow.
Yeah, because he went to Georgia like me. Damn good dog. All that.
Oh, that's awesome.
Yeah,
I'm jealous.
It's really great.
Did you sign?
Because you can't take your phone in. You got to just.
Oh, it's old school. Yeah.
Yeah, you got to just be in there with the golf.
Did you sign up for the lottery, or were you? Do you know somebody?
So my dad signed up for the lottery probably 30 years ago, and I think 10 years ago probably got the tickets. And so he has 2 tickets every day. And he passed away, and those tickets then went to my stepmother, and there's 4 kids. So we each get to go one day.
Wow.
Yeah.
That's like that. Blaine's living a life. Verde and I are just playing Xbox. It's raining outside. There's no small cap runners. You're going to be at the Masters. I mean, what am I doing wrong with my life?
Well, I'm going on a Saturday, so, market's closed.
That's awesome.
Bitcoin's open, don't worry.
Yeah, I could
no,
be.
I'm just kidding.
Crypto. Verde, this is the least I've ever said on an episode, which I think is a testament to how much you had to share. It was really fantastic.
Oh, thanks.
Yeah, really enjoyed it. I know Ellis enjoyed it. My God.
Oh, yeah.
I
was really excited to talk to you just because, I know it's for me, again, it's surreal, talking to, we'll call you a big name, even though you're probably one of the more humble dudes. I feel like we can
also say legend.
Yeah, definitely legend. But no, I just had so many questions. I prepare a lot, if you haven't noticed, so I have a whole list of questions I wanted to ask you because I think viewers hearing a high level of what you're talking about a lot of the time, I think our podcast represents 90% of the people who honestly half of us don't know what's going on. And it was fantastic.
Yeah,
I'm a huge fan. I'll stop rambling.
Ellis, I'm so glad you asked about the float. It's a good question.
Yeah, because people are so afraid to ask these questions, and you act like Verde. Did you ever ask someone what a float was when you were new?
I think I just Googled it, but yeah.
Same here. But some people, they don't know.
They'd rather,
They'd rather listen and take in the whole conversation of 2 traders talking about it in simple terms, and they can process it easier. I think, at least.
Yeah. No, I'm really glad you asked. That was something I should have asked. I didn't. Anyway, guys, this was a lot of fun and very educational, and I appreciate you both.
Oh, thanks for having me. This was super enjoyable.
Yeah, come back anytime. Open invitation.
Would love to.
Part 2?
We can do a part 2. We'll pick some sort of theme to dive into.
Perfect. All right. Well, thank you.